This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices settled down nearly 2% on Friday. Little changed on the week with Brent crude below $80 a barrel, as investors tempered expectations of demand growth from top oil importer China. Brent crude futures fell $1.36, or 1.7%, to settle at $79.68 per barrel. U.S. West Texas Intermediate crude futures declined by $1.51, or 1.9%, to $76.65. On Thursday, data from China showed its economy lost momentum in July, with new home prices falling at the fastest pace in 9 years, industrial output slowing and unemployment rising.
Asian refiners are snapping up Middle East light crude oil cargoes as high Brent prices curb arbitrage supply from the US, Europe and Africa, driving up the Murban benchmark to its highest this month, traders said on Friday. Refiners from South Korea and Japan have purchased spot Abu Dhabi light grades, Murban, Das and Lulu, for October loading in the past 2 weeks, while Indian Oil Corp, the country's top refiner, bought 3 million barrels of Murban via tender this week, they said. The purchases boosted benchmark IFAD Murban crude futures, with the premium for October contract rising 23 cents to $1.41 a barrel at Thursday's close, the highest level this month, Reuters data showed.
Moving on to the top news in the energy sector.
China and Saudi Arabia were the top destinations for Russian seaborne fuel oil and vacuum gas oil, VGO, exports in July, traders said, and LSEG data showed on Friday. Russian fuel oil and VGO seaborne exports last month rose 7% from June to about 4.05 million metric tons, helped by completion of seasonal maintenance on Russian refineries. Russia's offline primary oil refining capacity for July at 2.5 million tons was below June's level by some 44%, according to Reuters calculations based on data from industry sources.
Chinese biodiesel producers are seeking new outlets in Asia for their exports and exploring producing other biofuels as supplied to the European Union, their biggest buyer, dries up ahead of anti-dumping tariffs, biofuel executives and analysts said. The EU will impose provisional anti-dumping duties of between 12.8% and 36.4% on Chinese biodiesel from Friday, hitting over 40 companies including leading producers Zhejiang Jiao, Henan Zhenheng and Longyan Juweiyi Group in an export business that was worth $2.3 billion last year. Some larger producers are eyeing the marine fuel market in China and Singapore, the world's top marine fuel hub, as they seek to offset already falling biodiesel exports to the EU, biofuel executives said. Next, we have the top news in metal markets. Several Chinese banks have been given new gold import quotas from the central bank, anticipating revived demand despite record-high prices, 4 sources with knowledge of the matter told Reuters. The new quotas, aimed at helping the People's Bank of China control how much bullion enters the world's leading consumer of the precious metal, were granted in August after a 2-month pause largely due to slower physical demand in the wake of a bullish market. Spot gold has gained 21% so far this year, having hit successive record highs, striking a peak of $2,500.99 per ounce by 13:54 GMT on Friday as the dollar weakened and markets increasingly see U.S. monetary easing on the horizon in September.
Iron ore futures fell for a 5th straight session on Friday, heading for a second weekly loss, with bearish sentiment prevailing after weaker-than-expected steel prices in top consumer China hurt the demand outlook. The most traded January iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.99% lower at 697 yuan, $97.16, a metric ton. It posted a fall of 6.1% from last Friday's close and a decline of 26% so far this year. The benchmark September iron ore on the Singapore exchange slid 1.39% to $92.25 a ton, as of 0715 GMT, recording a loss of 8.7% so far this week.
We will now look at the top news in the agricultural sector.
5 new renewable diesel production plants opened last year, boosting U.S. output of the drop-in diesel substitute and other emerging biofuels by 44% to 282,000 barrels per day, BPD, U.S. Energy Information Administration, EIA, data showed on Thursday. 2 renewable diesel plants opened in both the U.S. Gulf Coast and West Coast, while 1 facility opened on the East Coast, taking the countrywide total to 22, according to the EIA data. West Coast capacity was 2.5 times higher at the start of this year than last, at 82,000 barrels of oil per day. U.S. fuel makers have rushed to add renewable diesel facilities to their portfolios in recent years, seeking ways to survive the transition away from their petroleum-based products.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.